Is the real estate market about to crash? There are a lot of questions on the internet right now and on news channels about whether the real estate market is overheated and ready to have a correction. In the last 2 months, June and July, we have seen a little bit of a downturn in real estate. But why is that? I don't think it's going to crash, but the market is cyclical and psychology does impact any kind of market. So in the zeitgeist, there may be a lot of people that are wishing it would crash because prices have gotten too high for most families to afford a home. And it might be nice if that happened, but are the fundamentals there to warrant worry where there will be a correction? Again, I don't think so, and here's the first case for that. For me, the first indicator that the real estate market is not in danger of crashing is the fact that investors are buying more properties. In the first quarter of this year, and now this includes single-family homes and multifamily residences, investors bought 20.8% of all the low-priced homes. So the low-priced homes for the first-time home buyer, for lower middle-income families, a fifth of those are being taken off the market by investors. They also took out 12% of the higher-priced homes and 11% of the medium-priced homes during the first quarter of this year as a hedge against inflation. So they're betting that real estate prices are not going to drop, and this is going to be a hedge for them where they can retain some of their money as inflation eats away at the dollar. The second indicator that we're in a stronger market is the fact that the loans nowadays are secured much better than they were during the crash in 2006, 7, and 8. Even with the pandemic, where we have forbearance coming to an end in September, we may have maybe 1 million homes that get foreclosed on at most. Is that going to make a big dent across the United States? Probably not. This information is strictly for the Arizona Regional Multiple Listing Service, or ARMLS as we call it. And I'll show you some statistics here about what's going on or what happened in June and July of this year. Here we see the sold to list price ratio for the last 2 years in Arizona. And this is really easy to understand. If I list a house at $300,000 and I sell it at $300,000, then that would be 100%. It's sold at 100% of what I listed at. But you'll see that after February, particularly for the average prices, that those accelerated so that people were listing at a certain level, but they were getting more than they asked for. And this is where the prices really went up. But in July, we do see a little dip. Now, is that a significant dip? Does that show a trend? Does this mean that the market is heading downwards? I don't think so. Well, let's take a look at some other statistics. And again, this is for the Phoenix metro area through ARMLS. We see monthly sales for last year in gray, this year in red, and we see a stronger market for monthly sales this year than we did last year. We can also note that the months of supply of inventory is the same throughout this entire last year. 1.05 months supply of inventory. A balanced market is between 4 and 6 months of supply. Here we only have 1 month of supply, a little bit more, and that is a strong seller's market, and that has not changed. Average days on market, still low at 27. It's been declining through the months where the market really heated up. Homes are selling as soon as they hit the market. So let's circle back to that sold to list price ratio that we talked about just a minute ago. People might think, well, July, those ratios have dropped a little bit. But the sold price is still 102% above the list price for July. Is it softening? Well, I wouldn't really call this a softening. So while we have that data to look at, there are some other important areas to look at as well. Let's take a look at investors. Why are they buying homes? One of the reasons is they can see inflation around the corner. And so they want to be in real assets. Real assets, gold, silver, of course, and then real estate, another hard asset that they can keep and hold against inflation. So if you've been watching the news, you've seen that inflation is going up as the economy recovers, and you've probably seen it at the grocery store and at the gas pumps as well. So one of the best ways to protect your money is actually to own real estate. Just to show you the importance of holding real estate, let's look at the Case-Shiller Home Price Index to get an idea of how inflation impacts what you own. This is a chart of home prices back in January 2000. We're going to use that as a baseline, assigning the number 100 as a baseline number. So we saw in the early 2000s a lot of homes being bought until we hit that plateau and we ended up with a crash. what caused this crash and why is this crash not pertinent to what's going on. We'll talk about that in a minute. Today we see the price index at 255. However, that's not the whole story. When we look at inflation adjusted dollars, we'll see that our high at 156 on this chart and our high right now at 167, not that great a difference. So yes, we're a little higher in price in inflation adjusted dollars than we were in 2006, but not as much as we were in this previous chart with just raw dollars. So let's talk a little bit about what caused this crash. During the 90s, the federal government got involved in real estate, and they decided that they wanted everybody to own real estate. They wanted everybody to have their own home, which is a nice idea. Problem is that they then went to lenders and told them, look, we want you to loosen your lending and even allow people NINJA loans. Now, NINJA stood for no income, no job, and no assets for collateral. So just about anybody could buy a house, and then just about everybody did. During this period of time, of course, prices rose because more and more homes were being taken off the market, law of supply and demand, until we hit a point where some private investors would bundle these mortgages together. Fannie Mae and Freddie Mac told these lenders that we would back these mortgages up with government-sponsored enterprises. Investors got wind of this and said, well, if the government's going to guarantee these loans, they must be good loans. So they would bundle these together and leverage that money, those mortgages, in order to make other investments. Eventually led to the crash when those people with no income, no jobs, and no assets began to default on those mortgages. Now those mortgages weren't worth as much. And this led to a precipitous crash back down to our January 2000 price index. During this period afterwards, stricter lending laws were created. The loans that were made during this period, and even now where we have the sharp increase in prices, were no longer loose lending mortgages. You had to show that you had income and a job, and you had to be sure that you could pay that mortgage back. And so even with a pandemic where people lost their jobs, there are far fewer mortgages that are in jeopardy of defaulting than there were during the time of this Community Reinvestment Act inflation of our home prices. And so to circle back to our chart one last time, why do we think there was a dip in the sold to list ratio for July? July is a historically slow month for real estate. People are on vacation. If they were going to move, a lot of times in the past they would move in April and May while the kids were getting out of school for families and before the heat really set in for the summer. But in July, a lot of people were taking time off. The other thing is, in the early months of 2021, those folks who had deep pockets were able to pay cash or pay over the asking price to get their home. But a lot of people don't want to do that. They don't understand the inflation adjusted chart I showed a little while ago that demonstrates the prices today are, while they're high, they're not as astronomically high as they seem to be. So those people are sitting out of the market right now hoping that it's going to crash. And again, that's the zeitgeist. That's where if you think about it long and hard enough and you put it out there and we talk about it enough, maybe it'll come true. People are hoping it would. And you know, to tell you the truth, in a lot of ways I hope home prices drop as well because it's too expensive. My goal as a real estate agent is to get people into homes. If they can't afford them, I can't get them into those homes. And so they can't build equity. They can't build those memories that the homes bring, that they gather with their loved ones and relatives and to build a sense of community where they want to live. So yeah, do I hope they'll drop? Yeah, I do. Are they going to? Probably not. Is there a way that we can help them to drop? Well, if we build more homes, because we know in the last decade we've built less homes than we needed, that might help drop the prices a little bit. Even the builders have higher prices out there now. So what we really need is builders to build lower and middle income homes at a reasonable price in order to make these prices go down a little bit. Is that going to happen? I don't know. We'll wait and see. But as far as the market crashing right now, it's not likely. The idea is if you want to build equity, probably now's the time to do it. Get in there. You can watch the market for a couple months if you want. I personally believe that by the end of August and the beginning of September, we're going to start seeing competition for housing go back up again. The July summer vacation time will be over, and we may be back into the bidding wars, unfortunately. If you have any questions, you want to know anything about your particular area in Arizona, let me know. Or if you're out of state and you're watching this, and you need information from a realtor close to you, give me a call, send me an email, comment down below, and like and subscribe to this video. For those out-of-state folks, I'll find you a real estate agent who can give you some counseling on what the market's doing in your area. Free advice. You might as well take it. Talk to the realtors out there. They'll tell you what's going on. They're not going to hound you and try to get you to buy or sell a home. They're going to tell you what's out there. They're going to help you get pre-qualified to see what you can afford to get into. And if you decide to sit out and wait for the prices to go down, so be it. You do what's best for you.